In this short video, I'll be tackling two questions. One is what are order blocks and how do we use them on the daily time frame? And the second question is how do we identify breaker blocks? All right, cool. So first thing first, let me just go and open a new chart. GBP. Okay, so for me personally, I don't look for order blocks first when I'm on the daily time frame. The reason is many times there's no order blocks on the daily time frame that we're trading like the market's trading next to. For example, we're trading right now here. Where is our closest order block? I see it as around here. I mean, that's the last down close candle. And that can be seen as order block on the lower time frames. So will I be waiting until market comes down to here? No, we're not going to be doing that. Only the times that we have few certain criteria that are met. So the criteria that have to be met is the market have to take liquidity out, because liquidity is quite important in what we're doing. So right there, that line, market took out liquidity and then quickly reversed, broke to upside, made these relative equal highs. Remember, we're on the daily time frame, so this might have taken a long time. So we call these relative equal highs. And also, so therefore, where's our last three candles? Around here. So that's the open of the candle. Stretch it. You see how the market comes back down, respects that level, rejects, and moves higher. That is a true order block on the daily time frame. You just have to keep practicing it. There's no other way that I'm going to give you a magic potion. There's no magic potions that I will give you that will make you get the right order block every single time. You just have to practice looking for these. Okay, so at this instance, on these 3 days from the 5th June to the 7th of June, these 3 days, you could have anticipated market stopping at this order block, and then you could have got multiple entries here going higher. That's a daily perspective. Okay, so you might ask yourself, if I'm not looking for the order blocks every time, what do I look for instead? I look for the fair value gaps. And secondly, I look for areas that are quite significant, which are the Sunday open price and the daily open prices. They're quite crucial for me. So at this level, or at this high, and this open price, and then the low, if we have any open price of the day or the Sunday open price, I don't think the Sunday open price is here, but you find it around here, then I project it forward and then I place my trades off of that. Obviously, you look for lower time frame confluences as well, and lower time frame breaks of structures, liquidity grabs, etc. Everything you look for here, you look for in the lower time frames. But I use those levels and I feel confident with the daily open prices and the Sunday open prices, and also fair value gaps. So you might ask yourself, how do you catch this trade? Use the fair value gap right there. You see that fair value gap from the high to the low of that candle. See how we come back down, find support and go higher. Cool, that's your fair value gap. If we go down to the lower time frames, for example, the 4 hours, you will be able to find that fair value gap coinciding with some sort of daily open price or Sunday open price, and I will show you this. So this is Friday. We're still on Friday, Monday, Sunday. It's around here. Okay. Sunday open price is right there. Stretch it forward. Okay. On the week, the general rule of thumb is if we're below the Sunday open price, we're area of discount, if we are predominantly bullish for the week. So you should be aiming to buy the market below the Sunday open price if you are expecting it to be bullish. But obviously, you are not that stage yet, so I'm not expecting you to be buying it below, old or the Sunday open price and then holding it for the rest of the week, because that's quite advanced. So once we break above and we find that fair value gap, the thing that is across the fair value gap is this high. See that 5 o'clock? Wait, 1 a.m. So around this level is the Friday open price. I'll highlight it and make it bold. You can see that bold area is the Friday open price and the fair value gap is right there. So what does that mean? These are two confluences, the Friday open price and the fair value gap. And your day's trade off the fair value gap, you can enter that. And also, if you go to lower time frames, this fair value gap is also, I believe, some sort of balanced price range. So there's a fair value gap around here, balanced price range, and also that area is breaker block, which we will move next. Okay, so to sum it up, all I look for is fair value gaps. No, the first thing I look for is key times. So every day's open price and the Sunday open price. Cool. And then I look for areas of fair value gap. And then I will look for, if the opportunity is given to us, I'll look for the order block. Order block just means 2 consecutive or 3 consecutive down close candles that take out liquidity, and then we break structure. That's all it is. And then you just find it, and you have to find targets as well, which are the relative equal highs. Ideally, after we create order block, the market will create a relative equal highs, come back down, give you the entry, and then go above that relative equal highs, which in this scenario is done. Cool. Now let's move on to the second question, which is how do we identify order blocks? Cool. An order block is basically an area of previous order block that failed. So I'll give you an example. Say this up close candle prior to us going down, taking out this low right there. Market supposed to stop at this up close candle, because people say, okay, that area is an area of bullish order block, so market should stop and then go lower. But what did it do? It refused to stop there and then decided to go even higher and break above that candlestick. So as you see this big movement, that's your break of structure. And then we come back down and you see how we never ever close beneath our initial order block, this area. The bodies stay above the order block. They never violate, they never go lower than this. I'll zoom in. To that little up close candle right there. The market comes back down. It never seems to break beneath it. And also, we have the open of this. That is your order block. From down here to down there. That's an order block. So when the order block comes and the breaker blocks are in the same vicinity, then that's a higher probable trade. It's a very high probable trade. Almost 90% of my trades, however, are based off the breaker block. So the fact that we break above and stay above the breaker block, I enter my trades on there. Like literally 90%. I don't wait for the order block to be tapped. This order block to be tapped right there. I wait for the breaker block and then I put my stop loss beneath the lows. So in case it accommodates, in case the market wants to come and tap the order block, it lets that possibility, come into fruition. You don't want to be restricting the market, expecting it to stop at this order block, because then it might want to break a block. So, because it might want to come down to these order blocks down here, and then when higher, go higher. So therefore, I accommodate my stop loss. Stop loss would be that red area. So that's all a breaker block is. When your narrative is clear and your areas of what's it called, your liquidity are set out clearly, then you'll be able to anticipate these order blocks forming. But order blocks alone don't define a trade, because you need to have targets and you need to know where the market is going or heading at. So you might be thinking right now, why did I choose this low? That's because it created that high. So these two areas were areas of long-term liquidity, areas that market has accumulated a lot of orders on each side, and it needed to take one side out and then go higher. So it took this side out, and the area that caused that movement down, or an algorithm, stopped prior to going lower and causing that Judah swing down, was that bullish candle. It stopped there, made that bullish candle. However, instead of respecting the order block and going lower, it decides to go higher, shift the structure. Therefore, that area of order block will act as breaker block. Okay, and that's all. That's all it is. And on the lower time frames, is literally the same. If you go down to the 4 hours, you can see this is your break block on the lower time frame, right there. You see how we respect it. See, boom, got higher, skyrocket. Cool. On the next segment, I will be talking about what I expect the market to do in the next week or 2 weeks for the Great British Pound to US dollar. Okay, let me go to my chart. So there's two scenarios. We've broken above this significant high, and we are inside this level of fair value gap on the daily time frame. Up to, I think it closes around 1.300. And you can see that candle is a bullish candle that forms on the Wednesday, 20th April 2022. So up to that level is just a fair value gap. So it could come up to there. All right. And now we're in the middle of that. Cool. The fact that we're broken above this high means something. It means we should not be buying above the high, because what the market does often is it breaks above highs and then comes back down, and then basically just balances this whole movement out. See this movement from, I think, this low to this high. That whole movement is just bullish. There's not significant retracements that occurred between that low to that high. Therefore, we should not be expecting the likelihood. It could occur, but the likelihood of the market just going higher from there is quite low. Therefore, sales are more favorable in these situations. Okay, and as we broke above the high, we've created a fair value gap. And remember the daily time frame. What I use the fair value gap, and I also use the significant times. So the New York open price for the previous days, or the Sunday open price. Okay, so we can see we have the fair value gap. Cool. And our next area of odd block is around here. So I'm not going to be waiting till it comes down here. I need to trade around here first. I need to predict what's going to happen from here, not when it comes down to here, because that could take months, or that could take multiple months. Yeah. Okay, now we go down to the 4-hour time frame. Let's see. So the 4-hour time frame, I've just drawn out the Sunday open price and the Monday open prices. We have broke, or we went below that level, which signifies weakness, or the market is at a discount compared to the price that it was at prior to Sunday. And also we've created relative equal lows with the Friday lows, with the Thursday lows and today's lows. Those are relative equal lows. Therefore, I'm expecting it to come higher, tap into the area of the Monday low, Monday open price and the Sunday open price, and then go lower and then fill the fair value gap. These down close candles I don't really care about right here at the below the fair value gap. Reason being, look beneath here. That low got manipulated and the market moved higher, forming us a balanced price range. And also that grey area is the breaker block, because what it did was broke beneath the low and then we broke above it. So that was the Judah swing down to then go higher. Therefore, if we come back down, we should not be expecting the buyers from inside the fair value gap. No, we should be expecting the buys to occur inside the fair value gap. But if it comes and closes the fair value gap, I believe this low that's highlighted at 1.26265 will be used as manipulation, then to go lower and then off this breaker block and then go higher. So you might be thinking, what days do I expect this to happen? Okay, so today is Tuesday. I expect the movement higher into the Monday open price to happen. The Judah swing up and then target the relative equal lows by tomorrow. And then by Tuesday, between Monday and Wednesday, the low of the week is often created. So if we come back down and fill the fair value gap by Wednesday, the low of the week will get created on Wednesday, and then the rest of the week till Friday we'll just trade higher, and then by next week we might hit 1.300. So that's what I think is going to happen. So for now, even if you go to the 15-minute, you're not really going to find any areas of point of interest or PD arrays or anything. You will just find these candles that are looking very anemic. Like there's no energy in these candles. Therefore, they might be actually used as manipulation. We might go above the high, and even if we go above the high, expect the subsequent movement lower, because we still need to feel this absurd price action that occurred during Thursday. This movement higher that formed the fair value gap in the 4 hours and the daily, this needs to be filled. but not before we get an entry around up here, or even use this as manipulation, and then we'll still be looking for the sells down to fill the fair value gap. That's what I think is going to happen. And please, if you had the patience to listen to all my rambling, then yeah, please just try to keep me updated on Discord. Thank you.